Simplicity of the highest order. Welcome to this video. And in this video, I know some of us have been struggling with this issue of backtesting, and I want to show you exactly how I've been trying to backtest my strategy, but to see whether it is working. And before you is a chart for GBP, JPY, British Pound, Japanese Yen. This one was on the 15 minutes time frame. This chart was downloaded on September 10th, 2023. So I think you can now figure out how long has it taken me to come up with this model. It has been a tough time, and that is what I can tell anyone who wants to know this skill of trading, that they should be committed in doing exactly what they want to get. So right away, this video, as I said, is a backtesting, to tell those guys exactly who are struggling in backtesting, a simple procedure on how I did it, because everything in this channel we keep it simple. Now, as you can see, write these lines here. These lines here. This one. See, this one also here. This one here. This one here. These lines are called period separators. TradingView has this feature whereby you can turn on these period separators for each day. What does this period separators mean? Maybe for a beginner. This period separator, this distance from here to here, is a distance of 1 hour of a day. Okay? 1 day, and it's 1 day period separators. Whereby if you're working with a 15-minute time frame, as we are right now, you can just do your math on in 1 day you have 24 hours, and 24 hours in 1 hour you have 60 minutes, right? So with the 60 minutes, how many 15 minutes are there? That is 4 15 minutes. So in 1 hour you have 4 15 minutes, right? So in 24 hours, how many 15 minutes will you have? Yeah, so it's just 4 times 24. Oh, my math is not working. Eh? Yeah, I know you guys are good in math. You can work that out and find out. So if you find the number of how many 15 minutes, see this candle here, there's one here, 15 minutes, so 15 minutes, 15 minutes, 15 minutes, 15 minutes, 15 minutes, until you get here. That is the end of 24 hour. Then you begin again, 15 minutes, yeah, that is it. As you drop down from the higher time frame, see, 1 day, just when you open the chart on 1 day, these period separators are not even visible, because it is in 1 day. So when you drop on the 4-hour time frame, you only have 4 of them. There's 24 hours, no, 6 of them. That is 24 hours divided by 4 hour. So you have 6 of them. When you drop down on the 1 hour, that is when you have 24 hours, right? And when you drop down on the 30 minutes, you have 48. And when you drop down onto the 15 minutes, maybe you have 96. I don't know if that is the math exactly. Yes, I guess so. So now, so you can just toggle that button on, and I think one day I'll just make a video on TradingView on that platform and show you exactly what we usually do there. So when I was trying to backtest this strategy, our strategy is just based on liquidity sweep first. Let me open this chart on some. I don't know if I can get this chart exactly because I have several charts opened up. Let's just work with this one. You can bear with me today. Or I can work with what? I can try like this. Okay, let's try this way. Let's try this way. Be patient, be patient, be patient, be patient. Be patient, okay? Okay, that is it. So I think we can just work with this. Thank you. So when I was trying to figure it out with our model, this is our model. This is our model drawn like this, right? Our model is usually drawn like this. That's the bullish version. Like we need to have a sweep of liquidity. This is the basic what? Without sweep of liquidity, you don't even anticipate to do anything in the market. So as you can see, this one is a different day, and I never marked anything. There was no setup. Oh, we can just look at it and try to see whether we have a setup. But the clearest one is that we took this liquidity, this bigger liquidity here. We drew that line, ta-da! Then we swept that liquidity. Then immediately after sweeping that liquidity, you start asking yourself, where is the first break of structure? Yes, and right here, the clearest one that we can see on the 15 minutes time frame. I don't know if you can, maybe if you drop down on the 5 minutes time frame, it's very clear, but this one is the clearest one on the 15 minutes time frame, first break of structure. And where do we usually set our entries? We usually set our entries at the lower low of the first break of structure. Then we ride the market up to the target or to the nearest liquidity. This here, this is where we set our buy limit. Then where do we ride the market to? To the nearest liquidity. But you see right here, it's kind of, we had some market structure shift, which means that we take this high. That's exactly what we did here. That's exactly what we did there. Right? And you can also do it in details. See, after this guy, okay, let me just delete this guy and show you here. See, these are separate day, and the next day right here. So these are different day, yeah. From here to here, right? That is a different day. Now the day opened up, and we had a sweep of liquidity, a clear sweep of liquidity here. I think we are coming to mitigate some guy, you see, some guy right here. But we had a clear sweep of liquidity here, right? After that sweep of liquidity, of course, we expect the first. We expect to take our trade on the first on the first lower low of the first break of structures. Lower low and ride the market to the target. See, this is the next day. That is the logic and thinking that should be on our mind. See right here, you don't have a clear first break of structure, so just leave it like that. You don't have to force trades. Maybe unless you drop on the lower time frame, like the 5 minutes, maybe you can find a clear first break of structure and mark its lower low. Then you ride the market to the target. But basically, maybe in that week we could have just maximized this opportunity. Yes. Okay. Yes, that is it. And see, going back on this day, these were separate days. Look at this day. Take your time and look at this day. What was happening here? I don't know exactly whether we sweep of liquidity from the other side, but with just our eyes, what we can see here is that we had this guy. Yeah, we took some liquidity here. Then we had this guy right here, this first break of structure, right? Then we rolled to the nearest liquidity right here. Ta-da! And also here, I don't know exactly whether we had sweep of liquidity, whereby if we had it, we see like this, you see, this is a sweep of liquidity, like this one we are working on the lower time frame, but this trading on the lower time frame is usually yeah, the setups usually what the market here is a bit volatile, yeah? And I don't really it's not really advisable to work to analyze your markets on these smaller time frames and just take trades on the same time frames. What you do is do just a top analysis from the higher time frame while you're building a narrative on where exactly to take the trade, right? You don't have to trade every now and then. In a week, 2 to 3 trades are good. You're good to go. Just with a good lot size, that's a lot of money, you guys. Yeah. So take only quality setups. Don't force setups here. Yeah. But what I'm trying to just to demystify here is how you could have maximized these opportunities here. Say there's a sweep of liquidity. We have a market structure chip right here. First break of structure was somewhere here. Then this guy here becomes where we take our sell limit, our sell. We sell, target, tada, this could be have been the target. This lower low here, which was swept. Okay, yes, this was a separate day, this was a separate day, this is another separate day. Yeah, that is it. This was not a really good. And we come here, this is where I took another mark, where we took another position, because we had a clear sweep of liquidity, as you can see. This one is very clear with that line. And what we did here was that, see, the first after the sweep of liquidity from a higher time frame, there always be a manipulation. This is it. First things first. You manipulated first. It sweeps that liquidity, then it manipulates first. Then after that manipulation, that's where now we start anticipating for a sell. Yes, after the sell-side liquidity has been swept. So this one here is manipulation, and you had a sweep of liquidity, right? So this one right here is the first break of structure. Its higher high, which is here, becomes our sell limit position, whereby we target this lower low, which we made like magic. That is it. That is exactly what we say by a magical trading model, right? Magical trading model. That is what we do in this market. So let me summarize what I've just talked about. How do you exactly backtest? How do you exactly backtest? Right? When you want to backtest this model, find the one currency that your favorite, currency pair that is your favorite, or currency stock pair, or stocks, or current, or your the indices that you love, that's the VIX, the VIX 75, the VIX 50, the VIX 100. Yeah, I see some people flaunting profits with those guys. Yes, but usually weekends I just deem it for just resting, because the money that we make for a week are just good money. Yes, that is it. The money that you just hope to make in a week is a good money with a good lot size. So how do we backtest? First of all, find the sweep of liquidity, like this one. From a higher time frame, from a higher time frame. First break of structure, clear break of first break of structure. Find its lower low, right? You see this, what I was telling you about manipulation. Sweep of liquidity, we manipulate first this guy here. Then from there now, that's when we start anticipating for a bar. We find the first break of structure. Then its lower low becomes our entry and ride to our target. Ta-da! Yes, a clear sweep of liquidity. You don't have to trade every time now and then, right? A clear sweep of liquidity. Wait for the manipulation first, right? After that manipulation, start anticipating for a sell. First break of structure. Here, then you ride target. Ta-da! It was just as simple as that. It was that simple as that. So by doing this, using period separators, at least you can find out how often does your model work. Yeah. How often in a week does your model work, and you can be able to separate those quality setups with the ones that are likely to fail. Yes, that are likely to fail. You only take those quality setups and you laugh with your money. That is exactly what we do. Yes, put a lot of time on this skill, because I believe this skill is something that once you just gotten a grasp on it, is a lifetime thing. Yeah, you can do this anywhere in the world. Yeah, wherever you are, just with your phone and access to internet. Yes, you do it, and life gets good. That is it. I've talked so much, and I hope I've made some sense for you guys. If you've learned something, the only gift that you can give me is a like on the video, and comment on anything you want me to talk about, so that I can. My main goal is that we all grow together as youths, mostly as youths. Yeah, that is my main goal in this channel. As I'm journaling whatever I'm doing, someone also might learn from my journaling slowly by slowly, right? That is it. Give video a like and a comment, and if you find it so informational, and maybe your friend also is interested in knowing the skill of trading, just suggest this channel to them, and you can share this video to them, and I will really appreciate when you do that. Yeah. Subscribe to the channel for the new ones, and we see as we grow slowly by slowly. I believe in a steady growth, not just boom, slowly by slowly. So thank you, and have a good time till we meet next on the next video. Thank you. Bye bye.